Since the inflation report, the price of natural gas is up 23%. The price of oil is up 10%. The price of cotton is up 9%. The price of wheat is up 7%. So we have commodities that are reaching decade highs. Corn, $8, highest level since 2012. Natural gas approaching $8. Peak inflation? Doesn't look like it to me.
Yeah, I mean, there's nat gas, as we said. Yet another great call from Mark Fisher, who came on a couple of times and told you nat gas was going higher. Jenny, are we done with the peak inflation move? I mean, we sort of started to hang our hats on that in thinking that the market could go higher. I remember Tom Lee was on with me in overtime, I think that very day, suggesting lows are in. This is fine. Remember Scott Minerd last week? Inflation's peaking, stocks can go higher, Fed gets more hawkish, I get more bullish. Is that gone?
Well, let's say it has peaked. And my guess, my money would be on that we have seen peaks. But that doesn't mean that inflation doesn't sustain at an abnormally, and I mean abnormal for the past couple decades of our 2 to 3% range. But let's say it sustains at a rate of 5 to 6%. 4 to 5%. What happens then? So let's say this 8.5%, fine, peak, that's over. But it sustains at 5 to 6%. You know what happens in that environment? Valuations contract. And so there's a neat chart out there that shows, I don't know if you guys can put it on the screen, but there's a neat chart that shows when inflation sustains at 5 to 6%, the market trades at a multiple of about 15 times. If it trades a little bit higher than that, the market trades at a multiple of 10 to 15 times. So what we have is a much bigger, much more powerful narrative going on behind the scenes, which is just like we didn't fight the Fed on the way up, we can't fight the Fed now. And what's happening is, as we're tightening, as inflation remains higher than it has been historically, valuations are contracting. So we'll get glimmers of hope and glory when we get a good earnings report here or there, or we get like a nice, data point like we did last week that made people feel relieved for an hour. But the bigger picture says valuations are contracting, and that's painful, and it's also unbalanced. So what we'll continue to see is the stocks with extended multiples, call it north of a market multiple of 19 times, extended multiples, they will continue to contract. They make up a disproportionate amount of the market weight, and they will weigh on the market like a wet blanket for some time.
Pete, is Jenny right? The Fed trumps everything? I mean, I don't know. We made this point 3-4 times over the last couple of weeks. If you tell me don't fight the Fed when they're got the fire hose out of liquidity in the market, but then you're telling me, well, you can fight them on the other way because we all know that it's coming and it's in the market. That doesn't work. Maybe we're learning that.
Yeah, I think we are slowly, not very fast, but slowly people I think are learning that. I think last week, the most important part of the week, and Joe just hit it exactly on, and this is something we brought up last week, was, okay, peak inflation. All right, well, maybe. But that doesn't mean you suddenly just turn and burn to the downside either. And I think a lot of people just expected that, Scott. I think the reality is just take a look at what gold looks like over the last week, 2 weeks. Take a look at all the various different commodities that Joe just brought up, and especially nat gas, which is now pushing $8. I mean, if you look across the board, you will see that we have continued to sustain, maybe even, let's say, build upon some of the inflation products that we all are looking at each and every day, right? Crude oil was 93, now it's $1.08. I mean, when you go across and you look at just about everything, yeah, there's still inflation. Has it peaked? Well, maybe it's peaked a little bit, but if it has peaked, that does not mean it doesn't sustain. And I think right now we're seeing that process of that sustaining mechanism that is part of what we're seeing right now. Obviously, that's affecting the markets, and clearly a lot of nervousness about that, and we're seeing that reflected in a lot of the various stocks, specifically the NASDAQ right now.